Good evening and welcome to the Accendo Traders Group. This is our stock market wrap-up for Tuesday, December 22nd. Our website is blog.accendotraders.com, where we put together effective video technical analysis trading plans on a daily basis. Trading plans help us stay abreast of what's coming down the pipe. It helps us to stay in our positions or get out. It lets us know that what could possibly affect our positions, and more importantly, helps us as we're scanning for new positions to see if they're good or bad. More importantly, by having a trading plan, we're focused on discipline, which cuts down our research time and allows us to spend time with family. So when you look at the market today, we can see a couple things. The dollar, once again, kind of fluctuated, and so did the market. But the market was doing pretty good pre-market before the market opened, and until 8:30 when the third quarter GDP estimates came out, and they were expecting 2.8, and we got a 2.2%. So although the GDP is positive, it's expanding at a slower rate than what was forecast. However, coming out a little bit later, we had existing home sales, which beat, and this is the third month in a row that the existing home sales has beat. That helped us. We already had pre-positive attitude before the market. GDP pulled us back a little bit, and then we still were able to set fresh 52-week highs for the S&P 500. But it was done a lot of volume. We've been talking a lot about that lately. We had fewer than a billion shares on the NYSE. And when you have a lot of volume, that kind of lets the market move maybe more than what it really was going to. But we'll talk more about that later. Our sectors ended positive for the day. All the three major indexes ended for the day. And then we really didn't have any other news coming out that moved the market besides the GDP and existing home sales. Tomorrow, we do have a little bit here with personal income spending, new home sales, creep inventories. But I think tomorrow, as we really again get closer to the weekend holiday, we're going to see lighter trading. All right, so here we are looking at our intraday overview from Finviz, and we can basically see that once again, we've got our move off the open. That's a very familiar scene. And then once again, after that first hour, we have the consolidation for the rest of the day. Very, very familiar pattern. So again, for our futures traders, we got to get in our trades early. And then if you want to fight it, you can fight it. And remember, we're getting closer to the holiday. And so certainly the afternoon trading is going to be harder. When we look at our little Rubik's Cube over here, you can see not as beautiful as yesterday as far as the bright green. We do have some, obviously, overall green, but we do still have a little plaid mixture of colors. So not as strong. And then when we look at the advance to declining, we can see basically 50%. Still have a strong stocks making new high, and still strong with stocks above the 20 moving average. Looking at this internally, we can see once again we had lighter volume. There's a trend there, both on the NYSE and the NASDAQ. Our breadth was positive. That our breadth is the up volume, number of buys versus divided by the number of sales. So we had more up volume, so we have a bullish breadth, but it's a respectable number. And our stocks making new highs certainly is respectable also, and as we just talked about, and we still have a good bit of stocks making advances versus declining. But again, as we go switch over to the daily charts, you can see we're coming to the top of our range. So let's go ahead and look at the daily charts, and starting off with the Dow Jones, and first thing you can see is this decrease in volume. Certainly makes it, before it was concerning, especially here, it was concerning. But now as we go into the holiday weekend, we have to expect that the volume is going to be less. So that gives us swings. And as I said earlier, it could be more of a move than it should be. But more importantly, as we talked about yesterday, we have our uptrend line from the March lows. And then we have this channeling mode that we've been in for the past month and a half or so. So once again, we are looking at a low of about 10,200 right about here, and then high of about 1,500 at the top of these wicks. So today's move was good, puts us up here, but we're getting closer to that 10,500 range, which means what? That's where we have to put our alerts. Maybe put it at 10,520, because we've had a couple wicks get up there, but will we finally close above 10,500 even in this light trading? Or will, just like in all these other touches, will the market just kind of come back down and test the 10,200 level? Switching over to the NASDAQ, we can see that the NASDAQ is continuing to break out. Remember, what did we say? We were talking forever about this 10,220 range right around here. And yesterday we broke out and we continue to move. Now the drop off in volume is not as bad as the NASDAQ, but it's still drop off in volume. So, and we also talked about yesterday this uptrend line, and so we had sort of an ascending wedge, ascending triangle, and we broke out of it Monday, continued that moved today, and then we went over to the monthly chart to try to confirm where we may go, and we talked about the highs here in 2006, right in here as a potential target, and we talked about the highs here, the lows here in 2008. So even so, we're still looking at 2,300, maybe 2,400, 2,350 for a potential target for the NASDAQ if it's going to continue to move on this lighter volume. Over to the S&P 500. And we basically can see that the S&P 500 is trying to break out of this range. Now the NASDAQ could be leading us higher. Again, let's keep in mind of the lighter volume. But there's the bottom we've been talking about. And then here was the top. And you can see we're just trying to break above that. So there is potential tomorrow for us to break. And that type of breakout may bring in some conviction, especially in the early part of the day. We may get some traders saying, hey, it's a breakout, let's trade it. So that is something that could move the market one way or the other. Otherwise, we're going to come right back on down. On the monthly chart for the S&P 500, we can see that getting us a breakout will bring us up to the 50 moving average, and that certainly needs to be your target for resistance. I wanted to go ahead and take just a quick second. On our blog, we have a couple of posts that you probably want to check out. For those of you looking for holiday presents, we do have some good stock market trading books that you can check out. Also, we have a great post on how to develop an effective trading plan. Really just how to test it and back test it and some of the components. And then, of course, over to the left, we have our futures day trading plan that has all the specific components and your entries and exits. But this here really helps you develop the skeleton, the overview. Also have a good post on using moving averages. So there's a lot of good things that you can find on the website. We're going to finish off with our education portion of our video, and we're going to readdress what we talked about yesterday, and that is the 5 truths to be a successful trader. How you develop the right mindset, the psychology of trading. And this is one of the hardest parts, because anybody can go out and buy a system. There's plenty of systems out there, plenty of trading plans out there. But why can I implement this plan and be successful and you cannot? Usually has to do with your mindset. And are you executing a trade when I would do it? Are you having an internal mental battle when I am not? Do you believe things are going to happen when anything can happen? Those are usually the things that separate the good traders and the bad traders. So you have to have the right mindset to implement your own system, a bot system. You got to be able to understand that anything can happen, and you don't need to know what will happen in order to make money. What you need to know is what are your entry and exit points. What is your system that says I'm going to click the mouse? And then once you test your trading plan out, like with the video we talked about before, you can spread out your random distribution of wins. If it's 80% win, when is that 8 going to be? The first 8, the last 8? You don't know. So it's going to be a complete random, which goes to the fact that the edge is just the high probability of your trade working. Because you took the time to develop a trading plan, you took the time to put in your indicators, your chart patterns, to give you in the position to succeed, but it's just an indication, it's not a guarantee, because every moment in the market is unique, because we have different traders coming in and out every time, deciding whether or not they believe it is a good price to buy or a good price to sell. As I've been talking about, we got a great futures trading room led by Alex, 10-day trial for $29. Even in a slight volume trading, we had great trades today. Futures trader, you're not going to find lower E-mini margins than $300, and you can get 20 free contracts if you sign up through us. And we have a futures trading plan that will take the overview from the video and give you the specific components. Thanks, guys, and trade at your own risk.